Welcome to SB Talks. Today is Tuesday, January 21st, and I am joined as ever by our Chief Investment Officer, Nick Ryder. Welcome, Nick.
Thank you, Vinny.
Now, Nick and I are today going to be discussing the Trump administration policy outlook following his inauguration this morning, the interest rate outlook in the US and at home, as well as looking into the latest US earnings season. Welcome to all our listeners. Now, Nick, Happy New Year. Welcome back.
Thank you.
At our last time of recording, we were completing your 2025 outlook, and one of the central themes, if you will, in that was the Trump presidency. At our time of recording this morning, he's just finished up his inauguration speech. I don't think we've got any major bombshells from that just yet, but probably have to go back and have a quick read through again. Probably worth taking a chance. Since we last recorded, we've had some of the Senate confirmation hearings into some of his cabinet picks, and that's maybe started to give us a little bit more color or detail to what potentially to expect. Anything that of key interest that you took away from that?
I think the most important one for financial markets was Scott Bessent's confirmation hearing. He's the new, he's likely to be the new Treasury Secretary.
Yeah.
And that's quite an important role. I think it was quite market friendly. You know, key things that came out of that is that he said he didn't think that the Trump tariffs would necessarily be inflationary. He talked about, using tariffs to protect the economy. Talked about the sort of ongoing importance of the US dollar maintaining its reserve currency status. So I think that was important for currency markets. Obviously, the Treasury is part of the... They are used to impose sanctions on places like Russia. So he talked about that, the importance of that. Talked about government spending being out of control, which everyone knows about, and, wanting to sort of rein in the deficit. But said that the social security entitlements wouldn't be touched, which is obviously very important, but it also makes it quite difficult.
Very important to many Americans, but how do you actually achieve significant cuts in government spending without touching it?
Well, exactly. There's very little actually in the budget that's sort of discretionary, where there is scope outside of Social Security and Medicaid to cut. And he also spoke about maintaining Fed independence. So I think, it was pretty well received by the market and probably by the senators at the confirmation hearing. So that was quite good.
I think when you get campaign Trump, and there's obviously a lot of rhetoric and a lot of significant statements, and dare I say now, everyone's sort of told, well, don't worry about that too much, it might not really play out. Hearing these sort of statements probably makes you have a higher degree of confidence that probably some of the economic policy, at least, is not going to necessarily be lurching to the radical, and at least in the early stages.
Yeah, and I think if there's one thing we can take away from the inauguration is sort of the immediate day one introduction of the 25% tariffs on Mexico and Canada and new tariffs on China. There was no mention of that. I think there's no plan to impose new tariffs on day one, and there was a discussion about potentially studying trade policy, so getting the bureaucrats to do some work on, where they might be able to impose new tariffs. In particular, looking at, sort of the existing tariff regime, particularly against China and their compliance with that. And, also looking at trading relationships, so very important for a place like Australia, where we have a, we buy more from America than we send them. So, will we be subject to any kind of universal tariff? So I think there's a bit of work that has to be done before tariffs come in. And we saw the US dollar pull back about 1% and the Aussie dollar rise about 1% on the back of that. A
little bit of a relief.
Yeah, a bit of a relief rally, I guess, in the dollar, Aussie dollar, that is.
Having the US dollar had such a strong run in recent times, but I think we're getting into it and saying, okay, well, maybe it's going to be a more gradual process rather than just a big slam of day one.
Yeah, and we know from Trump's first presidency that often there's a lot of kind of announcements, but then, maybe, bark's worse than the bite. There's maybe some work that goes on. So we'll just have to wait and see,
Now, we've seen not a huge amount of data since we last recorded. It is that sort of quieter time of the year, but we've seen some movements in the US 10-year Treasury bond yield and changes, a bit of a swing or roller coaster in the expectations in terms of what the Fed would be doing with their interest rates. Maybe talk us through, I guess, what we've seen and where you see the outlook as we stand today.
Yeah, so it's been quite an interesting year where markets are sort of flipped around between worrying about growth being too soft in the middle of the year when there was some soft employment numbers and the Fed talking about we need to potentially worry about employment, to now no, growth's very strong, maybe inflation's going to stay a bit higher for longer. So we've seen real repricing in Fed rate cut expectations, and basically, bond yields have risen about 1%. From the sort of high threes to the high fours, so they got up to 480, and then they've now
on the
come
US
back,
10-year.
The US 10-year, and that's quite unusual for the 10-year bond yield to be going up when the Fed's cutting rates. So it's really all about the growth outlook. Obviously, there's some factoring in of the Trump presidency and a sort of more pro-growth sort of agenda, a potentially slightly inflationary agenda. We've had the Fed officials sort of give some hints that maybe they wouldn't necessarily look through some of the tariff impacts on inflation. They might actually factor some of that into their thoughts about sort of the pace of rate cuts. And so the market's really wound back, a lot of the rate cut expectations for 2025. So at one point, I think there was maybe 5 or 6 rate cuts priced for 2025. We're now down to less than 2.
Yeah.
So that really kind of explains a lot of what's gone on.
A couple of interesting points in that. Well, one, obviously, they did quite a few rate cuts in the back end of 2024, so they realistically bought themselves room to probably pause and see how things play out. And not just the rate cuts, but probably the market's trying to work out what the long-term neutral rate might be. And that's been one of the big debates. Should it be going back to a 2% neutral rate? Should it be 3? Should it be north of 3?
Yeah, so the Fed's own sort of estimate of the neutral rate was around, I think, about 2.9 or something like that, sort of in the high 2s. But now there's been a real reassessment of that, and I think now it's maybe even in the high 3s,
right.
So not that they're saying that, but I think that's kind of where the market's saying they'll think rates will only kind of come down into that sort of 3.5 to 3 3/4 kind of range.
And stop there.
Yeah, because, let's face it, the US economy is performing very strongly. High interest rates have had almost no impact. So they don't need... They can justify lower rates because inflation's coming down, but it's not a necessity. I think that's the point. We did see a bit of a change. So the market was also worried a little bit that US inflation had kind of got stuck at that 0.3% per month, which annualized about 3.5%, 3.6% per annum, which is obviously well above the Fed's target. But we did get a good inflation number for December. And that was 0.2. Right. So it came down a little bit. So it was a bit of a relief there.
Not the worst case scenario playing out there. So fair to say, I guess, economy, as we enter the new year, US economy is in pretty solid shape. But we just wait and see what the new administration brings. But hopefully, potentially, it is a more cautious approach to policy rollout. We will see.
Yeah, well, we'll see. As I've written before, Donald Trump thrives on uncertainty, and he can flip-flop. So
I think second term Trump's just going to be a much more calm, mellow character, not courting any attention, just sound policy.
Well, we'll see.
We will see.
Yeah.
Australia, closer to home. Again, not a huge amount of data to pour through of great significance, but we have seen some positive or solid unemployment numbers and updated CPI data. If I ask the same question, how does that influence your thinking in terms of the outlook for when we may get some rate cuts in Australia? And that's moved around a bit over the last few weeks as well.
Yeah, it's a bit like what's happening in the US, So, we've got the official quarterly inflation number, which was 3.5% for the trim mean. We got the monthly number for November it came down to the sort of 3.2, so sort of heading in the right direction. So there's maybe a bit more confidence that inflation is coming down. But then we got a strong November employment report. December, 56,000 jobs created. unemployment went to 3.9 to 4% because of more people in the workforce, so participation went up. So basically, unemployment's been sideways for a year at around 4%, plus or minus kind of 0.1.
Yeah.
So that's really well below. So the RBA sort of thought that unemployment needed to rise to about 4.5% to be consistent with
their
inflationary goals, and that's just not happening. So I think the February meeting is definitely live.
Live is in a possibility for
a rate cut. So markets are 60% priced for a rate cut.
So better than 50-50 chance.
Yeah, slightly better than 50-50. But I think it's probably premature. I think we have to see what happens with inflation number at the end of January. Depending on that, maybe they'll go. But I think they would probably want more evidence.
You would think, in terms of what we're seeing from the economy and that unemployment number and inflation certainly not beaten yet, that caution, and we hadn't raised our rates here as much as they'd done elsewhere. Caution was probably the appropriate approach, but we also have an election looming and possibly a bit of political pressure there to bring some relief to the cost of living pressures to the voters.
There is definitely that, but I think also the RBA, if they cut rates in February and then inflation didn't come down, they would look pretty silly. I think So Governor Bullock has mentioned previously that they want to see more than one good quarterly inflation print. Yeah. Now, she sort of, hedged that a little bit, so maybe one good inflation print plus some other data to support it. But that gives some evidence of kind of where she's thinking. And she also basically, when asked about market pricing for the first rate cut in April or May, sort of said, yeah, that sounds about right. Now, who knows? So I think probably later.
Yeah.
But if I was a betting man, but markets, as I said, 60% price for February cut.
Yeah, market can get a bit over-exuberant at times as well. So I think probably slightly later in the year probably is the more prudent approach. And as we look out over the next few weeks ahead, we're just... seems to roll around so quickly, but another US earnings season.
Yeah, so Q4, very early at the moment, 8% of companies have reported, mainly the banks and financials, so about a quarter of those have reported, so your JP Morgans and Goldman Sachs and big firms like that, and the numbers have been pretty good. There was a decent amount of volatility in markets in the fourth quarter when they generate quite a lot of money from trading, so they've all had pretty good results on the back of that.
But all eyes probably on the big technology, AI, and the AI trades
absolutely.
over the next. Can their earnings justify the prices?
Well, that's right. I mean, that is the question. I mean, the market is expecting their strong growth to normalise and sort of come back to the pack over the next couple of years. So we'll just have to see how that plays out.
Wonderful. All right. Well, it's great to be back in the hot seat again. Happy New Year, Nick.
Happy New Year.
Happy New Year to all our listeners.